You know when you see a stock report that just says buy or sell, and you're kind of left wondering, okay, but how did they get there? Well, today we're putting on our detective hats. We're going to take this report on BBAI and not just read the conclusion, but actually uncover the clues the analysts followed to get there. All right, let's dive in. So this is our central mystery, right? The report says buy. But hey, a recommendation without any evidence? That's just an opinion. So our job is to basically reverse engineer this thing, follow the breadcrumbs, and see if the evidence really, truly supports that final verdict. Every good investigation has to start by surveying the scene. And for stocks, that means getting a feel for the big picture, the whole environment the stock is living in. You know, is it a sunny day out, or is a storm brewing on the horizon? Let's go find our first clue. Okay, so our first piece of evidence is something called the Simple Moving Average 200, or just SMA 200 for short. Honestly, the easiest way to think about this is like the long-term tide of the ocean. It just smooths out all those daily waves and shows you the real direction the water is flowing. Is the tide coming in or is it going out? And boom, here is our first major clue. The long-term tide, that SMA 200, is sitting at $5.28. But look at the current price of BBAI, it's way up there at $6.82. Now, when a stock is trading this far above its long-term average, analysts have a name for that, a bull market. And that's a really big deal. It tells us the underlying long-term momentum is strong and positive. So clue number one, the tide is definitely coming in. All right, so the big picture looks pretty good, but what are the big players doing? You know, the so-called smart money. Are they actually putting their cash where their mouth is with this stock? For our next clue, we've got to follow the money trail. To do that, analysts use a tool called ADOS. It stands for Accumulation/Distribution. I know it's a bit of a fancy name, but the idea is actually super simple. It just measures the flow of money. If you see a positive number, it means money is flowing in. That's accumulation. A negative number means money is flowing out. Think of it like our financial footprint tracker. And, whoa, check this out. The ADSC here isn't just a little positive. It's a massive plus 59 million. This is a seriously powerful clue. A number this big suggests that it's not just small-time traders buying in. We're likely talking about big institutions actively buying up shares. It tells us that even if the price has dipped recently, there are significant buyers stepping in. The money trail is hot, and it's leading right to this stock. So we've got a positive long-term trend, and we've got a strong money trail. Now let's zoom in a little. It's time to dust for fingerprints and look at the short-term clues that can give us a hint about what might happen next. This little table here is basically checking the stock's short-term pulse. And you can see the current price of $6.82 is above the average price for the last 5 days and the last 50 days. To an analyst, this says that even with all the daily ups and downs, the immediate upward momentum is still there. The patient's vitals are looking strong. But here's where a good investigation gets interesting. Not every clue points in the exact same direction. We've got the RSI, one momentum indicator, at about 55, which is solid, kind of neutral to bullish. That's a good sign. But then you look at another one, the Stochc RSI, and it's over 80. Now that is a sign of caution. It suggests the stock might have run up a little too fast, too soon, and could be due for a little breather. So because of those mixed signals, the analyst lays out two possible paths. They identify this key pivot point at $6.80. If the stock can stay above that level, the path towards $7 and maybe higher is open. But if it breaks below what's called a support level at $6.56, it could fall further. See, this isn't about predicting the future. It's about mapping out the potential risks and rewards. Okay, we've surveyed the scene, we've followed the money, and we've examined those tricky short-term clues. All the evidence is on the table. So now it's time to see how the analyst connected all these dots to come up with the final verdict. And there it is, the conclusion of our investigation. Buy on dips. This is really interesting because it's not just a simple buy. It tells us the analyst has weighed all the evidence, including that little caution flag we saw, and has come up with a very specific strategy. So let's just quickly recap the logic. First, the foundation is solid. It's in a long-term bull market. We saw that with the SMA 200. Second, the smart money seems to be buying, which we saw in that huge ADOSC number. And third, that mixed signal, that little bit of weakness, the analyst sees that not as a red flag, but as a temporary correction, a dip, that actually creates a better opportunity to buy in. See how it all just clicks into place? So, we set out to understand the why behind this stock report. And now you've seen the evidence for yourself, the long-term trend, the flow of money, the short-term signals. The final question, of course, isn't what the analyst thinks anymore. It's what you think. Is the evidence compelling enough for you?